Welcome to this revision session. My name is Anne and I am going to take you through the task number 4 from the AAT Personal Tax assessment, and this one in particular is taken from the FI mock number 1. If you are an FI student, you'll find this in your course materials in the printed mocks, and if you are not an FI student, then you will be able to download this from our revision questions. Just make sure you join the revision sessions. You'll be able to find the download there. So what are we going to be doing? Well, today it's income tax payable. So let's dive straight in there and have a look at our task briefing. So the task is all about income tax payable. It's worth 14 marks, so 21 minutes to do it in the exam. The task briefing will then take us through the sorts of things we need to be looking for and what our tax calculation may involve. So a few things to remember: make sure that we know how to deal with things like personal pensions, make sure we understand what gift aid is, make sure we understand how an occupational pension works, and so on. Not going to read it all, but if you know that you're a little bit rusty on the income tax payable and the income tax computation, then that is definitely a page for you. I will just mention this is a human marked task, so we're going to be given a grid-like area to complete our answer. It does have some of the functionality of a spreadsheet, but not very much. So I would suggest just treating it like a blank piece of paper and typing everything in that you actually need to. All workings have to be shown, and you'll tend to be given more space than you actually need, so don't worry if you haven't filled the entire space. So here's the actual question then. Julie has got some income for 24-25, some from employment, property, building society interest, an ISA and a dividend. During this particular tax year, she has also paid some pay-as-you-earn, which isn't unexpected because she has had a job. And she's made some gift aid donations. So things that jump out at me straight away are the different types of income. So I'm already thinking, okay, well, when I put this income together, I do that in a particular order. So I always consider the non-savings, then the savings, and then the dividend income. So these are non-savings. Then I've got savings income through the building society. The ISA is exempt, but I need to tell the examiner that I know that. I can't just leave it out. I need to say, look, I know this is exempt, which is why I left it out, rather than I didn't know what to do with it, so I skipped over it. And then, of course, the dividend. Let's take a minute to think about the gift aid then. It's treated in the same way as a personal pension is. And what we would do is we would gross up our basic rate band. Would also gross up the higher rate band. I don't think that's really necessary in this question because we don't end up using all of that band, but let's do it anyway. So I'd just like you to visualise a bucket. And the bucket just helps me to see how much income I've got in each section. So just visualise this for now. Let's have a line there, we have a line there. So the regular basic rate, check the reference material, is earnings of up to 37,700. So up to there, bottom of the bucket, all taxed at the basic rate. Higher rate is then 125,140. So anything between 37,700 and 125,140 is that higher rate tax. Then anything above that falls into the additional rate tax band. But what I'm now saying is that because we have made gift aid donations, we need to increase those limits. And the gift aid donation is £300. That needs to be grossed up. So we multiply it by 100 over 80, which gives 375. I would then go back to my bucket and I would update those two limits. So 37,700 added to 375 becomes 38,075. 125,140 added to 375 becomes 125,515. So I've now got two new limits to work with. And when I'm working out the amount of money in each category, they're the limits that I'm going to be using. So I now feel quite well prepared for where I'm going to go with this question. I've done my workings, I've grossed up my various bandings there. I'm going to start to actually put together my answer into the answer grid. Just to mention, I would, in the actual answer that I'm going to supply to the examiner, need to include this part. So although I've included it here for workings, that would need to form part of my answer, because if I messed it up, I wouldn't be able to get the credit for it. So I must actually make sure that it goes into my answer somewhere. So here's the grid then, pretty blank at the moment, that I'm going to be using to fill in. And of course, different tutors and different people have different approaches that they like to take to the layout for this. I'm going to show you my preferred layout, which would be to group my income into the three categories. So I'd have a column for the non-savings, column for the savings, and then a column for the dividends. And then I'm going to make a note of all the income in these different categories. So according to the question, we had income from employment, as well as property. After that, we had building society interest. We had an ISA, which we said was exempt. And then we had some dividends. So I'm literally listing the 5 sources of income that the question told me about. Just putting them in a list going down the page. But what I now need to do is be mindful of the allowances, which I'm going to come to in a minute. But for now, what I'm more interested in, if I can just find it. Let me close that one. Oh, it's here, isn't it? The figures from the actual question. So I need to just be popping these in before I get into any of those allowances. So let's pop in the figures from the question as they're given. That my employment income is 38,650. My property is 20,000, and none of that is savings. That goes into non-savings. And I've got savings 1,500. The ISA was exempt, so 0. But notice how I've included a note of it anyway, so the examiner knows that I know it's exempt. And then my dividends. We can then add up each of these. You don't have to add it at this stage. You might like to, but it's not essential. Because once you've actually gathered together all the income from the different sources, you have to remember that this person is entitled to a personal allowance. So the personal allowance you can get from the reference material. There. It's the amount that they can earn tax-free. And I would allocate that into my first column. So I knock it all off the non-savings income, as long as there's enough. If there isn't, so say the non-savings income was only 10,000, then I'd use 10,000 of it in that column, and the 2,570 would just carry over to the next column, and if that wasn't enough, it would carry over to the next. So that leaves me with 46,080 of non-savings income to tax, 1,500 of savings, and 8,700 of dividends. And I personally find that having these 3 different sources of income in their own columns makes it easier for me to work out the tax that needs to be paid. Again, you may say, I don't feel that I need to do it like that. No problem, but that would be my preferred approach. So I would now go back to my bucket, because I know my non-savings income is 46,080. So I would look at that and say, right, where does that fit then? £46,080 of non-savings income. Well, 38,075 of it would be down here, so at the basic rate of 20%. And then the difference between the 38,075 and the 46,080, the next £8,005, would be at the higher rate of 40%. So maybe I'd include a little row here to talk about the extension of the basic rate band. Just detail that working. So the gift aid of 300 grossed up to give 375 plus 37.7 to equal 38,075. So I do need that working, as I said, in there somewhere. So that seems as good a place as any to pop it in. But what then I'm really interested in is now the tax that's going to be payable. And as I have just said, for the non-savings income, the first £38,075 is going to be at the basic rate of 20%. With the next £8,005 at 40%. So I now take what I've written on my bucket and just put it in the columns. So 38,075 at 20, 8,005 at 40. So I jot that down in there. I'll do the actual maths for that in a minute. But that would then help me to tax everything that's in that column. That's the full 46,080 now dealt with. So what comes next? My next source of income is savings income. And the reference material tells me if you are a higher rate taxpayer, you're still entitled to a savings allowance. A little bit less, but you still get one. It's £500. So within my savings column, I've got 1,500 altogether. So I would go to my bucket and I would say, okay, I've got 500 here, which is at 0%. And I've got another 1,000, making up the other 1,000 of the 1,500, which is going to be at the higher rate. So that will be 40% tax on that bit then. I'm just going to move up my additional rate line up there, just to give me a bit more space. So 500 at 0, 1,000 at 40. And that's the savings income. And the other benefit of laying it out like this is it sort of focuses you, because you know for the non-savings bit you've got to be taxing 46,080, and you know that for the savings bit you've got to be taxing 1,500. So at each step you can check, did I get all that? Did I tax all that? And then for the final part, the dividend, everybody, irrespective of what they earn, gets a dividend allowance. So the dividend allowance for this particular tax year is £500. So I come to here, I add in my £500 dividend allowance, and then the rest of it is going to be taxed at the higher rate. 500 in there at 0, and the remaining 8,200 is then at the higher rate, and the dividend rates are given here. We're looking at 33.75 for dividends. So that bucket could perhaps be a little bit bigger, just so it didn't get so squashed. but I hope that it gives you the general idea. I really like the buckets for this sort of question because I feel that I can actually see my money being added up. I understand better how to deal with the savings rate and the dividend rate. They use up part of my band, but they're at 0%. I just think it makes it so much clearer and easier for me to see where each bit lands in terms of the different bandings. So 500 at 0 and then 8,200 at the higher rate of 33.75. So once I've got all that together, I'm now going to do the maths. I'm literally going to go through and do the calculation that I've written down. And just to make it easier, I'm just going to put all this in one column. You could actually put the answer for each bit in its own column and then add it together at the end. That would be fine too. Use normal maths rounding rules. So we get a subtotal. We then deduct pay as you earn because that represents tax that has already been paid through the employment as we've gone along, and that figure was given in the question, 11782. So 2,203 left. And that is the tax payable. Of course, I wouldn't be showing those arrows in the exam, but I hope that you can see by popping them onto here that I am taxing all of the income as it arises. Okay, so that's the first part of this question, the numbers part. We follow on by looking at another part here with Julie thinking of joining an occupational pension scheme and her asking you about extending her basic rate band. So we need to explain the tax implications of an occupational pension scheme for 3 marks. So very common type scenario here. It's sort of like a friend down the pub told us, and then your client comes to you with some story about how their friend pays less tax and you ought to do this, that and the other differently. So in this case, Julie is thinking of joining an occupational scheme because her friend said it will extend her band. What do we think? I think she's confusing this with a personal pension. So that's perhaps the first thing I'm going to say. So contributing to an occupational pension scheme will not extend the basic rate band although personal pension contribution would. So I think that's the crux of what's going on here. Some confusion between occupational and personal pensions. So we're saying the occupational scheme will not extend the basic rate band, although a personal pension contribution would. So how do we deal with the occupational pension scheme then? How would this question have looked different if we did have an occupational scheme? what would have actually happened is underneath where we have our gross employment income, we would have deducted the contributions into the occupational scheme at that point. So we would use them to reduce the income and therefore reduce the amount of tax that you would need to pay. So they still get tax relief, just in a different way. Let's go on with that point. I'm going to abbreviate it just because there isn't very much space, but contributions to the occupational scheme will reduce a gross salary and in turn reduce the amount of pay as you earn due. She's talking about paying in £50 per month. So the tax effect of that, so the tax effect of £50 per month to an occupational scheme would be £50 times 40%, because you are a higher rate taxpayer. Can't draw the bucket for her, but we can at least understand what we're saying by thinking about our bucket. So if this person's income was reduced, let's just look at the bucket. To start with, this income here, which is the top slice of the employment income, would be lower because I would have deducted the personal pension from the gross salary, and I wouldn't be paying 40% on that much. I'd be paying 40% on that much less the pension deductions. So this person would save tax at 40% on that £50 that they put into their pension. So whilst £50 would be added to the pension, the cost to you after the tax saving would be £30, because it's 50 minus the tax saved. So it's 3 marks, so I feel like I've made 3 points, if not a few more. So that would be all that I would probably need to say there. So that just gives you an idea about how to tackle that. The written sections, of course, are never particularly popular in the assessment, and I can understand why, but by the same token, we can't get around them. So I think it's a very good idea just to practice these, and remember that you are not being assessed on your spelling or your command of the English language. All that's required is that we use professional English. So don't be putting hi, or let's not be putting GR8 for great, or any of the abbreviations we might use in text to our friends. Let's rather just keep a professional language, and that's all that is expected. So that's the end of that one. I hope that you might join me for some other tasks, but we'll draw this one to a close.